How's everybody doing?
Good.
Good. Some good food.
Good feedback. I'm
Yeah.
glad to hear it.
Like this layout, it's good. All right, so this this is a quick 10-slide market forecast for 2022. This was written in December, so some of it's dated. Some of it was seen with rose-colored glasses, you might say. But we're going to take it anyway, and we can just kind of extrapolate what's happened versus what he predicted. The guy that actually wrote this won the Zillow gives out a glass ball award, right, for market predictions. He's won it 3 times, the guy that put this together. So it's Barry Habib is the guy's name. So 2021 recap. Interest rates. Forecast expects rates to rise in the beginning of the year. Anybody hear about rates going up? Yeah? Ooh. Except for John Bombachi. John Bombachi's a huge fan.
Yeah.
Forecast expected rates to rise in the beginning of the year and to recover into the fall. Actual rates did rise sharply through March as anticipated, but recovered a bit earlier than we have expected, gaining back most of the losses by late summer. Housing forecast strong demand and tight supply will push home prices up by high single-digit percentage. Actual, there was a strong demand, tight supply, but COVID caused supply chain disruptions and labor shortages, which pushed real estate values even higher than our robust forecast. These are good news, right? So rates aren't as bad as what we thought they were going to be, and prices are still going up. Properties are still appreciating. 2022 dynamics. The Fed will play a major role in 2022. Tapering. When they say tapering, does everybody know what that means? They're buying mortgage-backed securities. The Federal Reserve is buying mortgage-backed securities off of the open market, which is driving interest rates down. When they taper, it's when they stop buying mortgage-backed securities. It's the first way that they raise rates without raising rates. There's going to be some rate hikes. We're going to get one next week. There's a 96.5% chance that it's going to be either 50 or 75 basis points. It's already priced in. It's already priced in. It's not going to, nothing's, there's going to be tidal waves or earthquakes. The world's not going to open up. It's already priced in. All this stuff is already priced in, okay? The Fed can impact equity markets, drive interest rates, impact housing as well as jobs. Some Fed voting members rotate each year. The 2022 composition will be less accommodative than 2021. Fighting inflation is the main focus. Negative stock market reaction could cause the Fed to lose resolve. These guys are making money both ways. Up, down, I don't think that that's really going to cause them to do anything. If they're going to raise it, they're going to raise it. If they're going to cut it, they're going to cut it. It is what it is. The Fed should have hiked sooner. I 100% agree. I was very disappointed they only did 25 bips. And the reason for that is I think that the faster I said it the last time I presented. It's like ripping off a Band-Aid. You want to rip it off slow, you want to rip it off fast. Everybody wants to rip it off fast, especially my kids. So yeah, they should have hiked sooner. They mistakenly thought inflation was transitory. History can help us forecast how the Fed's actions in 2022 will influence the markets. So history is the best prediction of the future, right? You want to know where you go and you see where you went. In the 70s, Burns was the Fed chair. He ignored inflation, which was rising rapidly, insisted inflation would be transitory. Sound familiar? Year-over-year inflation ballooned from 7% in 1978 to 14% by the time he left in 1980. Burns remained steadfast that inflation was transient. Clearly an idiot. Higher inflation caused mortgage rates to rise from 12 to 18% because he was a buffoon. Volcker, who was, this guy was like the hawk of all hawks. He's so cool. I mean, he and the reason I say this is he had the stones to do what needed to get done. What he had to do was not an easy call. It was not going to make it popular by any stretch of the means. But what he did got the job done, okay? He hiked the Fed funds rate from 11 to 20% in 2 years. Inflation dropped from 14% to below 5%. Look at that. Can you imagine? Because inflation dropped, mortgage rates sharply declined 18% towards 12%. Must have been a bit of a real estate boom in the 80s, after Volcker got everything more in line. But there were some consequences. The S&P 500 sharply declined by 30% during this time, and tighter monetary policy pushed the U.S. into recession in '82. Sorry. Yeah, this guy was like the wet blanket of Federal Reserve governors. In the late 1990s, inflation doubled from 1.75 to 3.5%. Can you imagine just going up 1.75%? It was like, ooh. High inflation caused mortgage rates to rise from 7 to 8.5%. Unlike Burns, Greenspan took action by mid-1999 and hiked federal funds rate by 1.75, matching the rise in inflation from 4.75 to 6.5 in a year. Inflation responded and dropped from 3.5 to 1%. Mortgage rates dropped from 8.5 to 5%. I just want to go back over these past two and point out that under Volcker, you'll see mortgage rates sharply declined from 18 to 12 because they raised rates, right? Mortgage rates dropped from 8.5 to 5.5 because they raised rates to fight inflation. So initially what's going to happen, what we're going to see is, and I'll just finish this slide first, but there were consequences. S&P fell 50%, the U.S. entered recession in 2001. There was also a massive terrorist attack and we started the war. So today under Jerome Powell, this guy is Burns 2.0. He's just not, he should have been fired a while ago. 2021 inflation increased from 1.75 to 7 under Powell. It's actually 8. Think about that. I mean, he shouldn't have his job at all. Like, not even a little bit. You don't have to go home, but you can't stay here. Higher inflation caused mortgage rates to rise from 2.5 to 3.375. I wish. Fed is currently tapering their purchases of mortgage bonds and treasuries, will not hike and reduce purchases at the same time. Done tapering in March, likely begin hiking in May. Fed targeting 3 more rate hikes in 2022 and 2 or 3 in 2023. Inflation and interest rates can still rise until the Fed acts. If the Fed can tame inflation, mortgage rates should drop from higher levels. What you'll see is if you, as they're raising rates, when you see the inflation start to come down, that's when they'll turn. There'll be an inflection point. When rates approach the inflation and they cross each other, that's when you'll see mortgage rates start to come back down. So there's a pattern here. So under Burns and Volcker, it's 7 to 14%, mortgage rates 12 to 18, Fed funds 11 to 20, mortgage rate response, mortgage rate dropped every single time. But every single time there was also a recession. So to combat, and GDP was what, down 1.4 today? And think about that, 1.4, it's not bad. I'll take 1.4 all day. And if next quarter is 1.4, we enter a recession, that's fine too. If it's double digits, that's kind of a problem. But yeah, so under Greenspan went from 1.75 to 3.5. Mortgage rates went from 7 to 8.5. Fed funds went from 4.75 to 6.5. Inflation responded by dropping 2.5% to 1%. And mortgage rates dropped by 3%. Went to a recession, but always had a housing boom during a recession. And then there's Powell. 1.75 to 8, 2.5 to 5.25, 0 to 1 in 2022. Inflation response should drop. Mortgage rate response should decline. And stocks are expensive. The economy is slowing into a recession. We just had 1 quarter of negative growth. Here's some wild cards. COVID plays major influence on monetary policy and supply chains. Major surprise in COVID could change outlook dramatically. If God, no more stimulus, please. Additional stimulus may fan the flames. It would absolutely fan the flames of inflation. Will push stock prices temporarily higher. cause mortgage rates to rise further, make the Fed's job of corralling inflation more difficult. Another wild card would be run off the Fed's balance sheet. First step is Fed to stop purchasing new mortgage bonds and treasuries. Next step would be to hike the Fed's funds rate. Fed is still buying $70 billion a month in mortgage bonds through reinvestments, keeping rates low. If when reinvestments, mortgage rates could move higher than previously thought. This is just a bunch of stocks that he thought were overpriced. We anticipate mortgage rates to rise along with inflation during the first part of the year towards, well, you missed that one, right? Anybody? With Fed action, softened stock market, and slowing economic conditions, interest rates should head lower into the second part of the year towards, I don't think that's right, but lower, lower than today. I personally think we'll probably peak out in fall. I think we'll peak out in fall with rates being the highest, and then going into winter, we'll probably see them come down a little
Joe,
bit.
do you think that's fair to say that the miss on, and obviously this was forward-looking at the time, the miss on mortgage rates was likely due because of the miss on inflation. Inflation ran hotter than many people anticipated. I think when that 8.5% came in,
Yeah.
that was.
Well, I think it's a variety of things, right? Like, we're in a very interesting time. There's more jobs than ever before. You know, you look back, in '08, I owned a mortgage brokerage, and, you know, it was so bad. Like, I would have a file and I would go to submit it to a lender, I'd broker it, right? So I'd broker the loan to a lender who would then lend to that person, and we'd close and everyone was happy. I'd send the loan to the lender, oh, we're closing. What do you mean you're closing? Okay. What about this guy? Can you do it? Oh, we're closing. Oh, we're closing. Oh, we're closing. Literally, like, one day I went through 20 lenders and were like, we're all closed. Like, I don't even know what to tell you. So it's different this time in that you have things like the qualified mortgage for owner-occupied properties. You have a robust job market. I mean, there's not enough people to fill the jobs that we have. Unemployment is still relatively high given the number of people that have jobs and the number of jobs that are open. It's just different this time. It's just different this time. But what I would say is that because of the high volatility with the number of jobs that are open, COVID, and God forbid some new variant, and we're 12 to 14 million units underbuilt in this country right now for housing. Think about that. 12 to 14 million single-family units underbuilt. That's condos and single families. That's a crisis. It's not a shortage. That's a crisis. So, and we haven't necessarily addressed it. There is no plan to address it. The municipalities are a bit of a disaster trying to get anything through zoning or anything through a local building board. But, until that crisis solves itself, I don't see, rates could be at 8, 9, or 10%. I think people are gonna continue to buy. As long as it's a deal. Yeah.
Where does that number come from? Like, people have to live somewhere, right?
Yeah.
So where's that number of 12 million underbuilt?
I'm gonna guess it's an actuarial number. So it's a bean counter, a statistician.
Probably based on like census data.
Yeah, based on census data and based
Just
on.
increasing population at a certain age or something?
Right. Yeah.
Is that not building enough too?
Well, that's the whole, yeah, it's like that's
So what happened in '08, there was a lot of single family developments, a lot of shovels in the ground, lots of actual foundations poured. And those foundations went unbuilt for a number of years. I bet you a lot of them never even got built, because builders took it first, and they took it hard. It was really bad. I shut down my brokerage and I took the summer off. It took me a while to find a place to work at the time, and I was either going to go to Wells Fargo or I was going to go to JP Morgan Chase, because I was a huge fan of Jamie Dimon at the time, and Warren Buffett at the time owned 20% of Wells Fargo. So I was looking for someplace safe because of the calamity that I was coming from, worker world. And I went to Wells, and all the loan officers had no clue what was like. I'm coming from like a war zone. Like I'm coming from like, you know, lenders shutting down. There's blood in the streets. It's horrible, you know. And I walk in Wells Fargo, and they're like, everything's fine. I'm like, what? Yeah. You guys have no clue. And then, you know, it was about 3 months after JP Morgan bought Bear Stearns, and then AIG tumbled, and then it was fall 08 it hit full force, and then they started to get a little worried because the stock went from like 35 to $7. But yeah, it's going to be a little bit different this time because again, there's banks haven't put themselves at risk. There's no big projects out there. There's no big subdivisions going in.
Well,
You know?
building never really came back, right? Like,
No,
to the extent it was pre-2008, huh?
no, never did.
It never recovered, never.
Never did. Yeah, I mean, the banks that lost, and the only projects they're getting right now are usually condos, and they're not going to even be big, like 10, 12 units maybe. They're not going to do big projects. The bigger projects are few and far between. Any other questions? Conventional mortgages, FHA, VA, any veterans? Go ahead.
Quick question on the conventional mortgages
Sure.
in terms of the down payment across the different unit types. Could you talk a little bit more about that? Like, what is the minimum down payment for like a two family, 3, 4 plus?
So, for single families, it's going to be 3% conventionally. But you have to qualify. You have to be at 80% of the area median income. And in a high cost area, which Boston is, it's hard to think that someone's going to be at 80% AMI, area median income, and qualify for the $500,000 house with their debt to income ratio at 45%. It's like at some point, you know, yeah. So it's just a little bit tricky because there is a percentage of people that are going to fall in that box. I never run into them. I wish I did. I'd be happy to help them, but I just, you know, for whatever reason. And there's 5% single family, two families is going to be 15%. 3s and 4s, Freddie just brought back 20%.
Was
Yep.
25.
Was 25, it's now 20. 20% down for 3s and 4s. Owner occupied, of course. Yep. And I have some stuff that can be 10% owner occupied, 3s and 4s, but the rate's not pretty.
First sec, it's a 1080 or something.
Yeah, it's like a Fed computer. I price it out for you, but I didn't bring it.
But blended rate is high.
No, it's a straight mortgage, no MI.
So it is.
Yeah, it's a Goldman Sachs product. We partnered up with Goldman. So,
How much higher is it if they're not?
what's that?
How much higher is it if they're not owner?
If they're not owner occupied,
Rates.
they're not going to go to 90. They're going to 75.
So if you shoot that way.
Yeah. Go ahead.
I do have a question. I just want to say great job though, because that was the most depressing presentation I've ever seen.
This is the guy that.
Come on, man. This is good stuff. This is fucking riveting.
He posted on our
Exciting.
Slack channel about like if there's like any sort of Fed news or anything, and most of us were like, dude, that just.
No, you hit it home. I mean, you hit
No, I know,
home in the
no,
situation, you
yeah.
know? Like, I don't know. So there's a property that popped up in Waltham just a few hours ago.
Sure.
It's a multi-family with a 2 to 3 bedroom on the bottom floor,
Mhm.
and then rooming houses on the upper 2 levels.
Mm-hmm.
It's a it would be a
It's a
2-family. It's
two-family.
in a 2-family
It's a
zone.
two-family.
So can you buy that as a 2-family, even though it has the rooming house?
So a few things there. That sounds like a little bit of a unicorn. You would have to go to the town record, the city assessor, and see what they have it as. I would also potentially even cross-reference the original building permit to see what it was originally permitted as versus what its current use is.
Yeah. Been through that process.
That's where a great investor agent will come in handy.
We don't know how to vote.
Before you talk to the lender.
Right. We should have done self-sufficiency, that was,
Is there any, for non-owner occupied, any products out there that you don't have to put 25% in?
well, so it goes to the volatility in the marketplace. When things are really loosey-goosey, you're gonna get less than that. Things aren't loosey-goosey right now, things are kinda tight. You know, you could see it increase to 35%,
Really?
like this overnight. The second Wall Street sees a little bit of calamity, you bet your sweet ass they'll increase it 10%. I know, I'm just full of good news.
Real news, but.
I know we kind of like made light of your question, Steve, but I think the point is like, it comes down to what the actual use of the building is, keep me honest here,
Yeah.
but that's how you're gonna lend on.
Yeah, so I'm trying to put my appraiser hat on for a minute, right? So I'm just fast forwarding, saying, okay, the appraiser's gonna have to go to this property, where are they gonna go? To look at what it is and what to comp it to, right? So first thing they're gonna do is probably pull the assessor's card, right? And then if it's a little bit ambiguous, or he gets there and he's like, what the hell is this thing? It's not what it said on the card, you know? Then he's gonna have to be pissed off and go to town hall and try to figure out what it is, you know, but that's the path that they would go.
Do you still get is it still a two-family though? Because the rooming house is something you have to renew constantly, right? So
Is
it's
it
like-
actually a rooming house? It has a
That's what it
rooming house
says at
license?
least on Brentford. it says
Yeah,
it.
well, so how experienced is a listing agent, like, what?
I didn't look at the Waltham GIS yet.
Yeah, I don't.
It is a thing in Waltham. Waltham does have
Is it?
rooming house licenses, but if that was the case, you wouldn't even, that's a commercial loan all day long, right?
Yeah, that would be.
Even if there's a first floor apartment, you load.
It doesn't
the-
sound like it's a 1, 2, 3, or 4 family.
Yeah.
What is it legally zoned as, or what is it legally?
I'm
considered?
guessing two-family because it has, it's like 28 through 30, so it sounds like a two-family straight away.
If it's a legal 2-family, then yes, I can lend on that residentially. If it's not a legal 2-family, I could not.
Yeah. But even if it was used as a rooming house, say I wanted to buy it, and just say it's being used as a rooming house, but it is zoned as a two-family, and I say I'm just gonna use it as a two-family, could I do that?
Of
And
course.
just waive the
Of
rooming
course,
house?
it's gonna, again, it all depends, like, what the floor plan looks like, what the layout is, what's it gonna be when I get the pictures back in the appraisal, believe it or not, they do get looked at, so, just
If
depends.
it's chalked up as a true rooming house, you're probably gonna have
I would expect a
You're
problem,
gonna have a
yeah.
problem.
You got a million questions. But it could work in your favor, right? Because there's a lot of people that don't want to touch that, right?
The towns don't like rooming houses, so they might work with you. if you wanna
It looks
do
very nice from the out, I mean,
There are some
there's not a lot
there-
of pictures
yeah,
on the
not to go-
inside, it looks very nice.
Not to go down the rooming house like rabbit hole, but there's some actually decent rooming houses in south side of Waltham. Surprisingly.
Also take it with a grain of salt. A lot of these listing agents have no idea what the hell they're doing.
So,
Right.
the second house is just like
What do you
a
mean?
bedroom? Okay.
Yeah, it depends, but long story short would be, think of like a private room with typically with common bathrooms. And then might have an owner's unit. Many of them have like an owner's unit or a unit for an on-site manager. So they would have their own unit with their own kitchens and whatnot. But yeah, it would be common space with private bedrooms.
Okay. Like a dorm, like a dorm.
Like a
I was gonna
dorm.
say that.
It's like a party house upstairs.
So maybe this is a relevant conversation to this, which ties back to another thing that you specialize in, is if there was a true rooming house or otherwise different use that had a historical record of being a duplex, for example,
Sure.
to use Steve's example, where would a 203K come into play if a buyer wanted to screw the rooming house, I want to convert this back to its legal use?
Yeah.
Next level question.
How can I use a 203K loan to potentially get the deal done?
So,
And what is a 203K? Because I don't know if
So
everybody.
203K loan is a type of loan where you can include renovations and repairs. I've done probably more than anybody else in New England. In regards to your scenario, you would basically, as long as it met the guidelines, loan amount wise and with the scope of work that you're doing, you can take that unit that's a rooming house and turn it into a traditional unit. Just convert, take down whatever walls you need to take down, put up whatever walls you need to put up, build out whatever kitchen you need to build out, and bathroom as well, and you can do, convert it to just a more traditional home, traditional housing space. So that would work as well, if the numbers worked, right? So
Yeah.
that's the other side. The other side means the numbers have to work, but yeah, you can do that all day long. I did a very unique project in Pepperell. It was an L-shaped warehouse that the guy, for 3 years, it took him 3 years to get all the approvals in place, but he got it approved to convert it to a two-family. He bought it, I want to say for, it was in pretty rough shape. Mind you, this was a commercial spot. Took him 3 years to get all the permits in place. I got him a $600,000 renovation budget to convert it to a two-family.
On what was the purchase price?
I want to say
150.
350.
Or 350? Okay.
Yeah. And it came out absolutely beautiful. But it was all brick outside, everything needed to be repointed, you cut through walls, it's pretty, it's pretty intense. A lot of bread and butter to the 203K is your older houses, your structural problems, if you're gonna do an addition. A lot of the older homes get chopped up by the families that live there for 40, 50 years, right? So they'll just throw up a wall and make a bedroom, We've all seen those makeshift bedrooms, like, what the hell is this, a closet, what is this? So, but yeah, that's what the 203K is for, is just the dated properties, the shag rug, the popcorn ceilings, all those in style, 70s, 80s.
How much risk is there in that process when you're putting an offer in and they accept with that loan? Does that loan have to be called out?
Yeah, you
In
have
the
to tell
offer?
that type of financing, yeah,
It is,
absolutely.
okay. And then, I guess, how successful is it after that offer is accepted, usually, how successful is it getting through that 203K process of the quotes for all the work and then the bank accepting the quotes and being able to close on in time?
It depends on the person that you're working with. The mortgage process can be absolutely fantastic or an absolute disaster. And it really depends on the customer. If the customer is a bit of a shit show, it's going to be a shit show.
The customer being the person that's wanting
Person
to
buying the house, yeah. Right? If they can't figure out how to get their estimates done, if they don't follow my lead, first and foremost, if I tell them they have to zig and instead of my zigging, they're zagging, it's going to be a tough process. The first thing I do is I send my HUD consultant out on every single one.
Your what?
I have a HUD consultant.
Okay, yeah.
So it's a renovation consultant. They have to, they're part of the process on 90% of them anyway. So they go out, they meet with the customer at the house and they tell them what needs to get done. And the customer makes a wish list of what they want to get done. So and then right there within a week I have the list of repairs. Boom, done.
Is that something you get pre-qualified for?
Yeah,
Okay. And you can say, hey, you're gonna have so much money to think about to use or for renovation.
yeah, so like, it's literally like a checkbox on my software. Like, so a regular FHA loan is called a 203B. Nobody ever says I'm doing a 203B, just say I'm doing an FHA. And then a renovation loan is a 203K. It's just the difference when you check in B or K in the system. That's it. If you're approved for $1 million B, you're approved for $1 million K.